Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Sunday, August the 1st. The year's 2021. Let's talk trading. We've got a weekly open and gap and a monthly open. Just so you know, these videos are for educational purposes only. Your results may differ from mine. And let's start the month off right. Let's not lose any more on any one particular trade than we're willing to lose. Risk management. And brain management. No fear, no regret. So we'll experience no pain because pain doesn't come from the market. It comes from your reaction to the market. And when the market decides to smile upon you, money management. Make sure you take your profit before the market takes it back. So far, all of the gaps have filled this week. So if any of you traded the weekly open gap, I hope it was profitable. We're about a little over 5.5 hours into the trading day so far. And we're putting in the opening range for the week here. You can see we're 252 pips above the yearly open at the moment. Right now, we're 4 pips below the daily and weekly open. We have an inside bar from 4 weeks ago. We penetrated it twice to the upside last week. So look for a long at, let's call it 38.98. And to the downside on the weekly inside bar, 37.41. Lots of inside bar action according to the dashboard. So far, we've got 3 pairs over 100 pips. And I don't really see, well, we've got 2 New Zealand pairs against the euro and the pound. That's where the action seems to be. Also, the Swiss franc against the pound. Not so much with the Canadian dollar. I'm sorry, not against the pound, against the yen. And not so much with the Australian yen either. Buy zone. There's really not much of a bias on the gap, but since we've already closed the gap, we want to look to take out the pivot at 39.22. So if we can get above that weekly open, see if we can take out that pivot. We've got this big return bar right here. So chances are price wants to go back to, let's call it 39.54.5. Rat, range is too low. Pivot trading plan. Let's see, we say bearish. Still look to take out the pivot at 39.22.6, but the weekly pivot is at 38.72. So might try and bounce between those 2 pivots and take them out. And we have a monthly pivot all the way down 138.17. We'll be looking to take that out over the next few weeks. And we'll have to wait and see what happens. Once again, we've got the daily pivot. We had 2 pivots in 2 missed pivots in July and a missed pivot in June. See, maybe we'll take those pivots out. And when we look at the weekly, last week's pivot was missed. This week's pivot's missed so far. And monthly, we took out last month's. But right now, we haven't hit the pivot, so it's missed. We're in the lower wick zone from yesterday, or from Friday's daily candle. So look for price to bust out of the wick zone one way or the other. It's already busted out both ways. Not by much, but it still broke it. Range last week, 246 or 83 percentile. We'll just have to wait and see how this week plays out. And just looking at price action, simple. We've got the Walmart lines at 39.00 and 38.90. Already this hour it broke 90 to the downside here. If I switch over to the H1 chart, you can see what happened. It also broke the previous hour's low, but then it bounced off and came back. We had a 3-ball put in at the beginning of the trading day. So let's just see. As Walmart and I, we got a 311 set up here on H1. Once again, looking to go back and complete this return bar. But then again, there's this return bar right here. That price might need to come down. And if you remember where that weekly pivot is, I believe it's right around, I think it was 38.17, wasn't it? Where's that weekly pivot? Oh, 37.02. Where did I get 37.18 from? But there's the weekly pivot from last week. It got missed, and 38.72 is the weekly pivot that needs to get taken out this week. Yep, 38.72. Oh, the monthly pivot was 38.17. There we go. So I'm not losing my marbles. So look for price to return to this level. Don't know when, and it might not. But last week we talked about how to analyze a chart. We'll probably continue that again this week. And looking at the highest low, lowest high here, using the M1, but we're looking at an M5 chart and just playing these levels back and forth as the price, long at this, short here, just back and forth, trading with the M5 candle colors. You can see here it gave you a couple of pips, and some more here. There wasn't a short because that would have been a green or white in this case, a bullish M5. Don't want to trade against the candle color. It's simple. I read something that didn't have anything to do with trading, but it definitely applies. And they were talking about rules versus a system or a plan. Because we talk about trading plans a lot, and then we also talk about, rules of thumb. But there is a difference. You see, rules shouldn't be broken. If you have a rule, you're not supposed to break that rule. But a plan is not the same as a rule, because sometimes you can alter your plans, even though that may or may not be a smart thing in hindsight. But sometimes you might have a plan, but you see something that says, no, I'm going to make a change. I'm not going to follow the plan. I'm going to deviate. That could either be taking a trade that's not part of the plan or not taking a trade that is part of the plan because of something that you see. On the other hand, a rule is something that should be set in stone and you never break, because those rules are there to protect you, such as setting your stop loss so you don't lose any more in any one particular trade than you're willing to lose. And so I guess what I'd like to impart upon you, maybe for the month of August, don't break your rules. Don't break your rules. Don't break your rules, okay? So rule number 1, don't break your rules. Rule number 2, refer to rule number 1. So maybe you only have one rule. Maybe you say, I only trade with the daily candle color. Maybe that's your rule. Don't break it. No matter what price is doing, don't break it. Because you might have that rule in place to keep you out of trouble. And even though many times it looks like, oh, I could have made money if I broke the rule, that one time you break the rule, you wind up losing, you're going to be upset with yourself. So that's just something to note. Now, we were talking about analyzing charts, or something I see right here. Maybe you see it too. You see there was a gap. You see the low and then that price gap. Well, nature abhors a vacuum, and you see what happened? Price came back and filled that gap. So, and that wasn't the monthly or weekly open gap. That was just the gap on the M5 candle chart. So that's something, when you're looking at charts, you might want to look for those price gaps. You might want to say, hey, if I see price moving towards it, maybe I jump in, because I'm thinking price has to fill that gap. And sure enough, it did a couple of bars ago. So that's just another little trick of analyzing charts. You know, the different things you can look for. You can get overwhelmed. You could look for hundreds of things, and you might spend so much time, analyzing the chart, you never get a trade off. So what you have to do is you have to pick your, 1, 2, or 3 things that you look for, possibly for trade selection, and then maybe you have 1, 2, or 3 things that you look for to make sure you're not getting ready to get your head handed to you because you see things like a bunch of candles that are ranging in a small range. Or you might see price, failing to hold above a wick zone. So for example, here price went up, but you see these 2 wick zones? Price didn't close above it. And then look where price is now. Those are the things you can look for on just about every trade. Do they work every time? Of course not. But they do work some of the time, and you can take advantage. And, as I mentioned, just trading between the low high and high low right here. Let's see. The low was 93, 95. There's a chance to make a couple of pips. Some people will scoff. 2 pips, what's that? Well, it's 2 pips you didn't have. It's more money in the bank. I mean, if you're trading $10 a pip, that's $20. That's folding money. You can, put that in your pocket, right? You get 5 of those, you got 100. I mean, right here between the last hour or so, when did this candle open? Yeah. In this hour, there was a chance to make, let's see, high 88. Let's just call it 1 pip. Here you could have picked up 2 pips. Here you could have picked up a bunch, but let's just say 2 or 1, 2. Let's say 2 again. That's 5 pips. Right here, that's 7 pips. If you have a 10 pip goal, look how close you are. And in this case, if you stayed in a trade, you may have made more. Maybe you saw price break. You stayed in a trade, you saw price, pull back just a little bit, take off, break across this high, close above it. And then you say, well, let's see what happens. And that's pretty much how you can analyze a chart. At least that's one way. There's lots of different ways. So, fellow traders, hope you had a fun and safe weekend, and I hope you have a profitable August in the year 2021. Trying to think, was there anything else? Oh yeah, donationals. I'll be getting those the next batch out this month. Let's see. Somebody was asking about something. I gotta remember. I don't think I can remember. Maybe they were just asking where to get the indicators. Cruslick.com tells you how you can download the mother loads there, the MT4 mother loads. You find out how to get the donationals. So, fellow traders, just remember when you're sitting down at your trading platform, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumple.